All right, welcome everybody. This is the launch of our brand new series from our tax advisors and actually tax and legal advisors called It Depends. This series was something I bullshitted and made up because I kept asking a lot of questions to Tony, who was like, okay, I think that's actually a Davis question. And then I turned around and asked Davis and like, oh, wait, but parts of it's also related to Tony. So that's why we came up with this new series so that we can have more discussion about how things affect us in the tax side and also on the legal side. So this is going to be a new monthly series that we'll be doing where we will have a little topic and intro of the things that we feel that are most important, and something that will basically make sure that Tony does not go insane, does not lose his hair. You know, this is a way for him to like, all right, you guys suck at taxes and bookkeeping. I'm going to teach you how to do it easily so I don't go kill myself over this. So without further ado, this first session is going to be with our resident CPA, Tony Hoong, the CPA guy. There's a CPA dude. So take it over, Tony.
All right, cool beans. Well, thanks everyone for joining. It's definitely good old post-tax season. So wanted to, tonight talk about, a few improvement areas, improvement seasons, what you guys can do for taxes to make it a little bit more better, more bearable possibly. And then also at the end to talk about some bookkeeping. It's got probably the biggest thing I saw this past season from biggest pain points from folks. And then if there's any questions too, just drop along as we go, and then we can, get you those items answered. And then, yeah, on the series too, we kind of came up with some ideas overall for the next 7 months that's left. So if anyone wants like a certain topic too, feel free to drop that, and then we can pivot. We just pulled together some ideas that are I think most people ask this, but if there's anything tailored that anyone wants, feel free to let us know also. So good old It Depends here. So yeah, tax version today. Davis will hit us with the legal version next one. All right, let me check out a good old Zoom slides. All right, cool. So postseason digest. So kind of for what you guys thought, did anyone feel like they overpaid in taxes, or did they feel like you had a comfortable amount of taxes paid? Zero is always good, but it's always not realistic. But if you pay 10-20%, still like a fair share. But was there anyone that felt like they had overpaid in taxes
Other than me?
You paid your fair share for sure. Yeah, paid your fair share for sure. Yeah, so kind of if you felt like you overpaid in taxes, kind of big things you probably want to just see and think about is why did you overpay in taxes, or is your expectation right for how much tax you are paying? So depending on your tax situation, it's different for everyone, especially if all your income's from real estate, that could be different from someone's just all in W-2, mixed up in, or you have a business. So determining what your root cause is kind of your biggest thing. So if you did have a big surprise tax bill, then there's a few reasons why you could have a surprise tax bill. And number one is that possibly your work withholdings was not enough. So a lot of folks in tech, the withholdings are just never enough if you have RSUs. So just kind of watch out there for your withholdings. Number two, if you didn't pay quarterlies throughout the whole entire year, and then you just waited till the end, kind of a big surprise bill. It's it's not the end of the world, but it's you had to be paid later anyways. It just mentally helps, oh hey, 20,000 smooth over 4 quarters is a lot more bearable than just yo, got 20K to spare. So at least we're Asian and we hoard money anyway, so it's not a big deal, but just helps smooths it out a little bit better. So quarterlies, and then just not possibly planning. So not planning from the real estate side, say, hey, if you're going to sell a property, did you plan properly for that property? So primarily the biggest item that we saw is you sell property, but then you get all the associated expenses with it that actually reduce your taxable gain. So just having those items ready, especially if you made improvements on the property over the years, especially if it's a primary residence, you're thinking yeah, nothing really counts for taxes when you have a primary residence, but all those improvements that you make, from your flooring to your lights to your kitchen to your bathrooms, do keep track of your basis. So just one small tip there for everyone, like every time you're making like a capital expenditure on your rental or your primary, just start a Google sheet and start going at it. Every time you have it in there, just drop it in before the exercise comes. 10 years later, you sell a property and you're like, oh, like I got to pay a capital gain on it. But if you had all those expenses tracked at one point, really not a big deal.
Do we
So
have to keep like receipts associated with those expenses? Like if we're tracking on a Google sheet, do we have to keep the receipt associated with a particular?
I would
line item?
probably, yeah, I'd probably keep
Okay.
like, I probably just toss it in a Google, like if you have the Google sheet, just pair it with the Google folder.
Yeah, there
For
you
the
go.
record.
That
Yep,
makes sense.
yeah,
Thank
you
you.
know, good old plugs for Google here, all in the cloud there. So yeah, running basis sheet would really be big for everyone. So all big expenses, drop it in there as you go, because if you don't track it, you're gonna forget it. And then every time you just have, you know, something pop up, you're probably just too heat in the moment, or something, a pipe breaks, right? And you're like probably too pissed to even care about the accounting. Like you're just like, oh, why me? Like this property is like can't catch a break. So that's one thing. So if you're gonna sell a property, just watch out for that part. Or if you're planning to, you know, if you're gonna 1031 exchange, opportunity zone it, figure out, just planning is just really big. And then the other thing too is like, so that you're gonna sell, then also thinking from your other income sources too. So, you know, I know a lot of people are hustling out here, is, you know, for besides your W-2, making sure you have enough withholdings, your real estate. If you have stocks or you have a side hustle going on also, think about potential gains from there. So a big one that creeps up on people that I've noticed this past tax season was the robo advisors. So people that are using robo advisors, they're like always just buying, selling, trading, and then like next thing you know, like the brokerage statement has like this capital gain that they weren't aware of, and then they're like, WTF, why is my bill so high? And I'm like, well, your robot made you 10K, right? But you got to pay the taxes on the 10K. So just watch out if you're using like a robo advisor, and it could creep up on you there. Same thing with your stocks too. You know, that's, people sometimes don't think, you know, selling the stocks have tax implications, but if anyone's like day trading, just watch out for wash sales. That's always a big surprise. That's always awkward to explain. So wash sale, for anyone that doesn't know, is just if you buy a stock today and then you sell it within the next 30 days, then it's just, you don't get that loss. So just watch out there. So those things that just creep up. So stocks kind of playing with fire, but obviously it's a real estate group. You know, probably most people are just hoarding cash right now anyways, just to further down payments. So yeah, figure out your root causes of why you are overpaying in taxes and think about ways of how you can reduce your tax bill. And then just the last part would be, you know, it's just tax at the end of the day. Like the world's never going to end. You know, it's not like, you know, CPAs aren't doctors. We're not saving lives out here. So, you know, if there's a big tax bill, it's fine. You know, either one, if it's messed up, you know, amend it. You can always go back and amend it. Or if it is what it is, the numbers kind of don't lie. Unfortunately, just call it a wash for this year, and you know, next year, you know, plan to do better. If you do have a large tax bill, there are payment plans. I'm seeing a bigger trend. I'm not sure if it's like inflation or bad withholdings or tax reform. It's probably a mix of everything. But there's a lot of clients this past tax season that can actually like pay their tax bill, and then they're like, oh, what can I do? And I was like, there's installment plans. So you can get out over, you know, 6 months, or if you have a longer term period, you can apply with the IRS and they can see. Same thing with FTB, or each state will vary. So that's one way. Before interest rates were bad, I used to recommend like taking a HELOC, actually, to go pay your taxes, because the tax rates, or not tax rate, the interest rates that the IRS charges and the payment penalties would be higher than what your HELOC rate would be. But pretty sure HELOCs are probably 8-9% now. So that's a terrible strategy. So, and then the other one, I had a client use it. I learned it from them, is they took a loan from their stock portfolio. So I was like, oh, interesting. So different ways to borrow against, but I guess, you know, just understand how much interest the IRS is going to charge. along with any penalties there. So yeah, just kind of like some postseason digest items just to like share with you guys from like, hey, these are some common trends that we noticed, and just to highlight it here. So let's see here, and you got some
Well, my question was actually when you said that you could pay in installments or pay late on your taxes. What are the penalties of that? Like, am I going to get flagged down more easily, or say in terms of interest, like, is it really high?
the interest rate changes every quarter. I probably want to guess it's very close to market always. So I would assume it's like 6 to 7%, but I have to look it up. Penalties are always, until you pay it or get on installment plan, it's like 0.5% per month. And then I think once you go on installment plan, it's like 0.25%. So just,
Sounds
it's
cheaper than real estate. Can I just not pay my taxes and use it for real estate?
yeah, some people don't pay their taxes, it just goes, and then essentially you just get a lien once it goes over 50K, federal. Yeah, you get a lien put on all your crap. So if you try to sell your house, they might have a lien on it. Anyone in California though, the franchise tax board, it's actually quite savage. Had a buddy like the last month, they seized his bank accounts. So the FTB actually will take your bank accounts, unlike the IRS. So I was like, it's the second time that I've seen that now. So the FTB actually, if you have to pay one tax bill, pay the state one first, and then wait to pay the Fed. Seems like the Fed just doesn't care as much, as I've noticed. So yeah, and then anyone in California though, if you do have a tax bill, and like 99% of all the counties are extended anyways, so you actually don't have to pay your tax bill till 10/16, which is quite rare. So all that rain we had was, apparently a disaster. So you got time to pay your tax bill, so you can hoard onto your cash in the meantime, or find other creative ways to find more money. So yeah, that's just to digest. If anything's if you felt like you overpaid in taxes, understand the causes, that what are the root causes, what it was, and it's not the end of the world. It's just tax, some cash, just turn on your hustle and find some more money. All right, cool. So next slide here. So good old Ben Franklin with the heaters always. So if you failed to plan, you're planning to fail. And his always classic heater is, nothing's guaranteed in life but death and taxes. Ben Franklin's my dude here, as you can tell. So just thinking smarter about your taxes and getting together some type of tax plan is what I recommend. So it doesn't have to be like a full-blown, drawn out, sophisticated tax plan. Like, it's just as basic as, you're going to go buy a house, right? You have a plan of, all right, I'm going to go, at a high level, I got to go find money. I got to find a good agent. I got to run the underwriting. I got to get a property manager, do it myself, set it all up. Like, yeah, that's the backbone at least. And then sure, yeah, you can get way more detailed of like, oh, I'm going to shop for 7 rates. So I'm going to explore these different types of loan products. So from a tax planning standpoint, same thing really. So have a tax plan, do the basic compliance at least. So you have your annual returns. For everyone that's investing out of state too, understand your city, county, state requirements too. So there's Tennessee this past year, there's a ton out there. The cities, obviously there's no state income tax at the personal level. So all the city and counties get their income or get their tax in another way. So just understand where you're investing, understanding the basic compliance is what I'd say is like your baseline tax plan should just be compliant at least before you move on to the fancy stuff. I know everyone always wants to save on taxes, but if you can't even do the basics of 101 of just filing your tax returns at all the right places, at the right times, then yeah, there's bigger problems to be spoken about. But then once you have that tax plan, yeah, you can refine it over time here, and really base your tax plan based off your financial goals. So if your goal is to buy a primary or buy an investment unit, and say if you're self-employed, you probably don't want to look poor as crap on paper unless it's like one of the adjustments that your mortgage loan officer person's going to adjust out, like mileage or depreciation. So think about, it's unfortunate. It's kind of like a pay to play type of game to get real estate. So yeah, don't make yourself look too poor on taxes if your next, year or two, you're really trying to gun to buy a property. So set your tax plan around your goals. And if you know you're like, hey, I'm not going to buy a property in the next couple of years because I just need to hoard for a down payment anyways, then yeah, like do by all means reduce, find strategies to reduce your tax bill and your taxable income to the lowest possible, since next 2 years, they won't even look at your tax returns. So tax planning, just important on here on this side. So outside of, you get more sophisticated strategies then, of course, where it's like, hey, do you want to set up, so say if you have your plot of properties, right? Do you want to set up a property management company for yourself so you can show some earned income to possibly juice up like a solo 401k or something like that? So getting more creative next. If you do have, depends on what cards you're dealt, right? It's probably can list out a whole bunch of hypotheticals all the time to go over, but it kind of just really depends on your situation. Hence Gold Series is, it depends. There's never one cookie cutter answer. Where else you're going to do a short-term rental loophole, right? Understanding that bonus depreciation is phasing down 20% every year right now. So it's 80% this year, 60% next year. And then on your short-term rental loopholes, right? No, it's a pretty big, saver for W-2 folks. And just understanding the complexities, or it's not complex, the tedious parts of documenting all your hours, documenting all the other people's hours, and just dealing with a short-term rental and understanding it's not always sunshine and rainbows. So that's another thing from a tax planning side. So if you want to deploy these type of strategies, just making sure you have all the documentation in place. Otherwise, just in case you ever get audited and you have to furnish it, not a pretty story, for sure. So yeah, just big on tax plan. Just have something in place. Doesn't have to be rocket science. Can be back of the napkin. Like, all right, I'm just gonna do these 5 basic things. File my annual tax returns. If I have quarterlies, or at least on your own personal side, reevaluate if you have to pay in quarterly taxes. Figure out if your out-of-state rental needs local tax obligations, file those. And then those are 3 basic things. And then the big thing too is bookkeeping now. So, the planning to fail was probably the biggest failure that I saw this past year, is just getting bookkeeping from folks. So bookkeeping, head into the next slide. And then let me just see if anything else you've had in the chat here. See, W-9s. So is it important we collect W-9s from vendors, and do we have to issue 1099s? So it's good to, so either, if you're self-managing, then yes, that's a good idea to collect W-9s and then issue the 1099s. But if you have a property manager taking on everything for you, I mean, they're the ones paying the vendors anyways, right? You're just probably adding your money into your not escrow account, but like the account where they house all your funds. So yeah, just watch out for 1099s. They're due every January. Very cumbersome exercise too, but going into the next point, if you have good bookkeeping, then it doesn't matter. You'll actually have easy access to issue 1099s. Let's see here. Oh yeah. Let's see. How do you issue 1099s? A couple of easy ways. So yeah, accountant can do it, CPA can do it, EA can do it. You can do it yourself. You just need to make sure you just grab the 1099 NEC form or the 1099 MISC form, and pretty much you just take all the data from the W-9 and just transfer it over to your 1099. So on the W-9, it'll be like, all right, who are you paying? Where do you send it? And then their EIN, SSN. The big thing too is if you're going to paper file these, they actually require these like special red forms from the IRS. So you actually have to like go on the IRS website and then like ask for however many you want. Like every season we order like 100 just for fun. Just there's always someone who doesn't want to do it online or some issue. And then they'll send it to your house, and then also have the corresponding 1096. The 1096 forms a summary of all your 1099s. Okay, 1099s. All right. Yeah, definitely very easy to do on your own. It's just like if you don't have time or you're like just lazy, like you don't, it's the only way you pay someone your 1099s. Track 1099. I've never seen that, track1099.gov. Let me see it. But as long as they file it, it's pretty straightforward. I just needs a copy to go to the state, that copy goes to the IRS and that contractor. So let's see. Oh, this looks nice. What's pricing like? Oh, Avalara. Oh, wow. Wait, what first 15? Oh, $3. Oh, you can't beat that. Yeah. Oh, this is solid. Shark99.com. Oh, I like that. That's a good tip. That's a good tip. All right, cool. This. All right, cool. And then receipts. Receipts, I would always just track receipts. Yeah, yeah, Ben, solid there. Take a picture, they're in a folder, good to go. And then physical ones. All right, there you go. Physical paper. Now I'm not a very big like paper guy anymore, so all online or bust. So good. All right, penalties, we talked about that. Probably consider that. All right. Oh, apps and platforms for tracking rep hours. Oh, nice. So yeah, to track your rep hours, few tools that you can use. There's Reps Tracker. They have a good app out there too. There's Clockify. That one's pretty solid. It's free too. So Clockify is another easy one. And then good old spreadsheet. So pretty much, on your spreadsheet, if you're going to DIY yourself, just put your who, what, when, where, why on it, and actually have real hours. Like don't put like, oh, I did bookkeeping for 8 hours today and make it round. Like if you spent like 3 hours and 24 minutes on it, like actually be that detailed. Don't round up, I guess. And also say, and then make the hours realistic. Don't make them unrealistic, because if you do need the log, they'll punch through all holes possible. Driving, just be careful on that one too. That's always like one that gets people in hot water. Primarily, it's just always that first trip, don't count it. The second one is kind of what I recommend. But if you're just going back and forth, the rental, exclude all that from time, but get the mileage in at least. So that's one thing there. Cool. All right, nice. And then just on to the good old everyone's nightmare, bookkeeping. So bookkeeping is just tedious, not rocket science by any means. So on your bookkeeping, this is that's the biggest thing for most folks to do this year. And even just every month, it'd probably be a good idea just to do your own bookkeeping for your own personal finances, how your rental's performing. So not only do you need it for taxes, but you're making these investments into these homes, like you should probably understand, like, is this thing actually cash flowing or not? If not, why is it not? So bookkeeping is not just for taxes. It's, I recommend it's just for yourself also. So bookkeeping, you can either learn it yourself. There's a crap load of resources on YouTube. I mean, just go, piss away 40 hours 1 week and just like go through it and learn it. It's not rocket science. It's just very tedious. If you don't want to learn it, you don't have time to do it, just hire a pro. Either, probably CPA is probably not the best because it's going to be expensive. Probably just go find a bookkeeper that actually knows what's going on. If you got skill and can source people from the like overseas now, that's another, big thing. So if you got some game and can source over there and they're good and they won't mess up the books, then I recommend it. I guess just before you hire someone to do your bookkeeping, just maybe vouch to see out their work and see their work product. Because I mean, regardless, US based ones can be good or trash. Overseas ones can be good or trash. Just be wary of who you hire. But primarily the whole purpose is that they'll go in and, categorize, what the purchase was for. Is it going to end up on the balance sheet? Is it going to end up on the income statement? So learning it and then maintaining it is it's probably the downfall of most folks. They don't maintain it. Maintaining it is usually like April 1st or April 14th. And it's like, oh man, I got to get all my receipts and scrambled together. That's when everyone does their bookkeeping. But it doesn't have to be that miserable if you set up some systems to do it properly, or have just the practice, or just hire someone to do it. Like I hear these like legendary stories about overseas bookkeepers being like $8 or something an hour. So I mean, tap into that even if you want to deal with it. So you know, if not US, in the Bay Area, bookkeeping rate's pretty bad. I think it's like 65 an hour or something, but it's not the prettiest thing. But yeah, the differences between places. But you can probably find someone. I'm in the Midwest right now, so I'm curious what the Midwest rate is right now, but perhaps find someone. Well, apparently, I was driving by to go to my parents' restaurant, and Subway is paying $14 an hour in a town of 5,000 people. I was like, damn, $14 an hour to be like an artist sandwich or a sandwich artist or whatever you call it. I was like, damn, times have changed. Times have changed. So I guess bookkeepers overseas are cheaper than Subway workers in the boondocks. So yeah, so going into this, you know, few tools that you can use to go over your books. You know, there's QuickBooks if you're balling, or if you have a portfolio that can substantiate it. QuickBooks, I would say probably is, you know, probably your top preference, just because you can set up classes in there, and each class is technically like the rental itself. So then all your rentals are just housed in QuickBooks, and you can break them out per class to see how each one's performing. And then also, like, if you don't care how each one's performing, this has a simple view for the roll up. Stessa is another solid one here too. So we did say we're gonna like, oh hey, you know, introduce Stessa, but then I also like was going through it, and then I was like, oh wait, they got the freemium model, so their income statements are free, but their balance sheets are not. And I was just like, oh, like, and then just for our target market demographic, I'm like, yeah, probably like not be worth that much time if we're talking about like, hey, this is a paid product that, you know, more or less tracks expenses that you can probably just do on your own time. So that leads me to my last one, is just going over a spreadsheet. So just spreadsheeting it diligently is another easy one too. Oh yeah, Wave Apps is solid. Yeah, Wave Apps. Oh yeah, because Wave Apps was it. We looked into that one too, and the only like downfall of that one was like, if you have multiple properties, you need multiple companies. So like it is free on the income statement and balance sheet side, but you just have to set up multiple properties. But then again, I guess if you're bootstrapping and not paying $25 a month for QuickBooks, like you probably have a lot of time, or you just don't value your time as much.
Right.
So it's
Well, I
kind
mean,
of up to you.
Wave is that what I recommend for real estate investors is they should have separate bank accounts and separate credit cards. So it's not bad setting up with a, you know, so-called different company for each property.
Oh yeah, not bad at all. No, it should be, it'd be clean. Yeah, if you have that much time, as long as you don't have like a portfolio of like 20 plus, it's probably still manageable. Like if you just if you think about it, there's like 5 line items per month, right? You got rent, you got mortgage, you got utilities, and then what is there? I mean, unless you space out insurance every month instead of lumping it in like 1 year,
Well,
taxes.
if you have 20, you probably have a property manager. So then you just use the cash flow statement from them at the end of the year or quarterly.
Yeah. Yeah. And that's another big thing too. Lean into your property manager, because yeah, if they I guess maybe when you evaluate your property managers, actually see if they do have an income statement, maybe peg onto them like, hey, can you maintain a balance sheet too? I haven't seen anyone that gives a balance sheet, but just that could be a nice little add-on too, for them, just to be like, hey, how's your property performing? And then for yourself too, if there's any outside bills, that's another one that kind of like gets mixed up sometimes, is that people will pop over a property management statement, but then they make some like repairs by themselves, and then those expenses aren't captured out there. No, that's really good. Yeah, Wave Apps. I've never used Zero. Have you? Has anyone here used that before? I was curious on that. I see
Yeah,
it.
Tony, that was the one I forgot the name of, but yeah, that was the platform that I was trying to mention. Yeah. It was,
Oh, yeah. So not like mediocre or decent or trash.
depends on the user, but you can actually break it out by property within the same entity. So if that's what you're going for, then it's viable.
Oh, maybe that should actually be the follow-up one. Like make a guide on Zero then. That'd be sweet then. Yeah. So whatever free tool there is, free tool, or I mean, these are lower cost ones. It's not gonna kill you, but I know like when everyone's underwriting, you're putting in every cost in here. So, adding in all your software expenses and your bottom line matters a ton. So yeah, so these, and then the last part, I was just gonna show on actually, Annie, with this fancy PowerPoint background thing, can I share a different screen if it's not a PowerPoint thing or no?
Yes, that means you have to click the share screen button.
Oh, there we go. All right, nice. Dinosaur man over here. All right, so change this basic.
He might be dinosaur man, but he's really good at TikTok.
Oh man, I just I think before the call I posted one that I had to get off my chest. It was actually like anyone it was actually a member from this group that made me think about it. It was income-based student loan repayments. And I think I just got not angry, but just like ticked off because I'm like, wait, how can income-based student loan repayments go off of a married? So like if you're married, they'll actually take your spouse's income and factor into how much you can actually pay. But then I'm like, that's not very fair because it's their debt and it's like not their debt. So why would they have to pay into it? So then you're kind of more or less forced to do married separate, and then married separate is just a disadvantage, like not that great of tax filing status. So yeah, silly TikTok for the day.
Wait, I don't get this part about the married separately thing. Are you talking about filing separately?
Yeah. So when you're married, you can either file like married joint or married separate. But when you're married separate, it's the same as if you're filing single. So like the one that was I was going through to do the numbers on, like they lost 15,000 because they couldn't do married joint. So because they're doing married separate, but if they did married joint, yes, they'd save 15,000, but then I think the number came out to like 2K extra per month. So then 24K extra in 1 year. So your tax savings don't offset how much more you have to pay. But then the whole point of the whole program is forgiveness one day. So obviously you just want to like bootstrap as little as possible. So it was kind of a backwards policy, kind of like how if you give someone gifts for tax purposes, it's only $25 per person per year, which is what a 1980s number. That's not like inflation adjusted. So that's another stupid one. I don't know. I could probably go on about policy all day, but we will not. So let me find a template here. And then so template here. So yeah, so this is like if you just want to bootstrap it and just like not use a paid software, and you have, it would probably take maybe 30 minutes a month, maybe, for your rental property. Like I said, there's not that much going on in here. So literally just go in here. So on your, so two parts. I think the biggest thing for most folks to realize is that you should have a balance sheet. I think that's the hardest part, is like the balance sheet's not the easiest, and an income statement, right? Income statement's easy because everyone's like, all right, how much do I make? So, drop in your rent. You can probably space this out for, all 12 months if you wanted to, and then just do a roll up. But I just kind of did it for an annual basis. But simply put, track how much you made in rent, and then simple, items enough, what was your mortgage interest? If you can break it out. If not, you can put your mortgage in here also. I kind of set it up just for tax purposes. So it's a lot easier. How much is your insurance? Did you pay anyone to, commission fee to get, your unit rented out? Do you have cleaners, especially all the short-term rental folks? Always a ton of cleaners there. Big thing, auto and travel, promo SARECon here, just probably just, if you're in there, just spread it across all your properties, developing yourself here, your continued ed, management fees if you're paying anything, if you got any pest control, painting, repairs is a bigger one too. And then your utilities. So, and then just some other baked in fees, right? If you're doing any softwares, service fees. So yeah, we only like at Wave Apps, if you just have one, or if you have multiple, you actually are setting it up properly. That's kind of like what we recommend also. So this is on the rental property side for income statement. And then
Sorry, stay back over here. When you said about the con that you would split all four, what do you mean split all four, or split across? Like just
so
evenly divided?
So say if you had like 4 rentals, right? And you paid, actually, how much is a ticket? Yeah.
Like $399?
$399. So 100, like $400, like you could probably like make it look clean. And I mean, Schedule E's don't really get audited anyways. So, just spread out your travel across like, $400 ticket, space it across like 4 units. So it's only like $100 for that. Cause like, hey, you had a plane ticket, you had a hotel, Ubers. So just spacing out and double dipping a bit more, a little bit on the gray side, but you can say like, hey, you're networking, meet these properties. Or if you're in California, I guess you could actually take a trip and visit the property also. So just another way to bake in some more fees and get more aggressive with your write-offs.
And then so if you're organizing by your folders, say like you have your Google Drive or something, am I
Mhm.
supposed to create folders that's individually, one for advertising, one for association fees and all, whatever that across them? Or should I be putting my receipts in each individual house then?
I would just do it like house, and then within the house, like have subfolders for per year, and then just toss it all in there. Like worst case scenario, you would just get audited, pop over the whole folder, and just let the IRS agent like do their thing. So yeah, we got one guy on the team. He was like a former like revenue like auditor, and then like got shoved a stack of receipts. I'm good. Like he didn't even care because he's like IRS auditor doesn't, they're just there to push paper at the end of the day. So yeah, depending on like how cumbersome some people don't care, some people do. So it really depends on like how nice or how much that person cares about their job. Yeah. So yeah, no, good old SARE tickets and snipe them up, right? Cool. And then balance sheet. So yeah, so if you have like business tax returns, aka for rental purposes, 1065s. So if you have a partnership, right, you definitely want to start this. Yes, if you're under $250,000, you don't have to track it, but one day you will. Hopefully that partnership grows up to that big, and then you kind of be like SOL if you didn't have a running balance sheet before, because you need to figure out what your starting balances were. So on the balance sheet, I mean, it's nothing too crazy really for rentals. It's always going to be, you're always going to have your mortgage on here. You're probably going to have, all each person's capital investment in here. And then anyone that's on a Schedule E though, you don't actually have to track a balance sheet. This is anyone who's in a partnership. So if you're just like, you own your properties outright, don't care. Like it's just put on your Schedule E and you don't have to care about balance sheet. So this is like anyone in a partnership. So yeah, you have your mortgage, you'll have each person's capital investment into there. On that side is kind of like your big things. You'll have your retained earnings, your net income. And then on the asset side, it's really going to be, hey, it's going to be your building, your closing costs. You'll probably have security deposits on here. And then you'll have accumulated depreciation, and then you'll have just cash in the bank. So not terribly hard to maintain for a rental property. It's not like you're running like a full-blown like business or anything. So yeah, this is just an easy bootstrapped way to do your accounting if you don't want to pay for software. But it sounds like Xero might be the way to like explore it and then tap into that. So that's one thing from a balance sheet, rental property side, income statement, just to share. So yeah, if anyone has any questions on it, I think I can kind of boil it down, keep it simple. Obviously, like once you're in it, you'll like more questions pop up. But for rental property accounting, it's not the hardest thing in the world. Just very, very tedious that no one does frequently there. So that. And then, yeah, that's pretty much it. So just from a tax season digest to planning to bookkeeping. But yeah, just leave a little bit more time for if anyone has, questions about this stuff or taxes in general. Probably don't have an answer, but feel free to ask. Yeah.
Well, what do I do with the stuff like the K1s and syndication things, like where we really don't know until like a lot later down the year?
Yeah, so the K1s, so you'll always get that for yourself. I think the biggest thing on K1s for you to know, and then probably just ask like who's like on the K, like who's more or less managing that partnership. I would just ask, hey, do you expect a positive income or a sale this year? and then have them project and give you an estimate. Or if you have K1s, just know, like, ask for like how, like, each quarter, you can just simply ask, like, when I was like at KPMG doing it, we actually like prepped like quarterly estimates for all these investors in K1s. So it's just like, hey, I'll just run a quarterly estimated taxes, reach out to your partnership and be like, hey, what's the projected net loss, net income, any capital gains for you? So that's a good question there too. Because especially if, like, say if in like the I forgot even the name of it, but so say if you sell, like, that partnership decides to sell a unit that year, right, to the fund and cover costs, right? And it's just like, well, shit, there's probably a capital gain associated with it. So it'd probably be nice to know, like, from your side, if there are capital gains being reported, and then we can, make a calculation, be like, oh yeah, $10,000 capital gain. Oh, it's long term. Oh, you're in this income bracket. It's, 20% Fed, and then whatever, good old state rate would be California 10.3 or whatever. So then, like, oh, hey, I should get at least, because distributions of money from partnerships come randomly. It's not perfect, right? So if you sold that part and you're like, oh, my share was 10,000, I need at least, 3,000 to go pay taxes. So kind of just getting ahead of the ball with all your partnerships and just anticipating it too. So it's always good to just do a check-in with your partnerships to see how everything's performing. And like the simple question would be like, are we going to be in income position? Yes or no? If it's yes, then you care. No, like, yeah, it's whatever. Because syndications, right? There's really no true money till like year 4 or 5, right? On the most of them that I see, right? Nothing happens in years 1 through 3 anyways.
And so for those of you guys don't know that Tony's actually my CPA, and I think I have a question about the way that I'm sending you my quarterly stuff, if I'm actually doing it correct. So like, I give you my gross rental income, but am I supposed to be giving you gross rental income plus like whatever the statements come from my property managers? Because there's all the expenses. Because when you do, because I'm curious, like if I'm doing my quarterly statements with you and the payments, am I actually paying off of my gross one, which would be like extraordinarily high? Like,
Oh, yeah.
because I do that.
So it would be both statements. So from the property manager plus so whatever they have for statements, and then their total expenses, and then whatever from rents. But like there's always prior year data. Like generally, like you can always like check out like rentals unless the mortgage is paid off. It's always gonna be a negative, or it's always gonna be a negative for tax purposes.
So I'm not actually like overpaying by every quarterly that I'm paying. If I
Oh
do
no.
the gross
No, I
one.
leave off your Schedule E's because it's not even worth doing it because I know it's negative.
Oh, really?
Yeah.
Is
Well, because I know it's
that-
negative. Yeah.
Oh,
Yeah. Just to
okay.
save time, because I'm like, oh, it's negative. I'm not going to do anything unless
Is it
like
because I did the cost seg, or is it just because it's real estate?
it's always real estate. As long as you have mortgage interest plus depreciation, like it's always going to more or less be negative unless there's some rare rentals out there, short-term rentals, that do go positive, and then you have to account for it. But as long as it's not a short-term rental, it's always like a long-term. Some midterms come near zero, so not a big concern. But yeah, midterms, short terms, just to care, because sometimes I'll see a property and I'm like, damn, this guy killed it. What market are they in? And is it a short-term rental? Is always like my question to them when I talk to them.
So that means I've been doing extra work that I didn't have to all this time, and you didn't tell me, dude.
Oh, we have the statements at least, just to have it.
God, I've been stressing out and like putting these quarterly reminders to like hunt down my property manager for these and things. I'm like, so I didn't have to do that. Oh,
But do you know how how the unit performed though? That's more so, hey, do you actually know, like, are you making money or no? It's always the bigger thing that I care about, because there's always like taxes. Like I always say, like, don't let the tax tail like wag the dog. So like some people want to invest in real estate, but then I'm like, yo, there's actually no benefit for you if it's a long-term rental. There kind of is, right? Like, yes, the income's tax-free, right? You're not going to pay any taxes on it after depreciation. But there's always like this, I don't know where this philosophy came from, but there was like, if I put $50,000 as a down payment onto a unit, that means I don't have to pay taxes on 50,000. They think that's $50,000 a down payment. It's a write-off. I don't know where that came from. Same thing with the same, like, hey, if I start an LLC in Wyoming, but I live in California, it doesn't matter. Like all this bad advice out there. But cool. Let's see here. Are there any questions from anyone? We are
And how about if
solid.
people want to get your a copy of that sheet? Can they email you or
Oh yeah.
how?
Yeah, just hit me up. Just pop over that sheet. Good old Tony at the CP dude. Cool. Oh, let's see here. This one item here. Okay, cool. Let's see. So the LLC question. So if you're based in California and then you invest out of state and you want to have an LLC there, like, do you need a California LLC? So like say if, I'm in California, but then like I got a unit in Georgia and then I formed a Georgia LLC, do I technically have to have a LLC in California? And this one's like super gray. So the technical answer is yes, but like no one does it. So yeah, it's just there's no way that they know is the biggest thing. So like, yes, like I just, we just formed an LLC in Georgia. Yes, like do I physically like do business in California and I reside here? Yes, yes, should I have a foreign registration in California? Yes, but will they ever know? That's kind of up to your risk tolerance, right? Like how by the book do you want to do it? So it's kind of up to you. Like if you want to be square by the book, yeah, file your LLC in the state where you're gonna out of state invest and then file a foreign corp in California. And then yeah, I guess it's kind of down to your James on your risk tolerance really. Because like it's just like I just remember like at KPMG, like it was just like, does this investor want to do it or not? And then they're just like trying to save 800 because it kind of adds up if you have like 50 LLCs across and you're doing like multiple deals at like a very high scale level. And then say if you imagine you had 50 times 800, like just in LLC fees for no reason. Yeah.
And I'm curious, there's so many of investors in here. What are ways that you guys are making it easier for yourself? Like, are you guys using many particular apps or what's your strategy of organizing your receipts?
Receipts. Receipts generally, it's always just been, get the receipt, take a picture, or like a lot of it's just online too. So it's like cool if we like say like just recently just purchased a registered agent service. I just put a label on it and then just tossed it into my Gmail folder for that property. So I kind of lazy with it. I'm like, all right, if like all crap hits the fan one day, all right, just go back and like find all, like just download all the Google attachments and call it a day. But best practice would actually be like if you have all the time in the world, or if you have the resources for it, you can then just you can technically hyperlink it. So download the invoice and then hyperlink it.
So I can share what I also do myself personally is I have everything connected to Dropbox. So I have a folder that's just for taxes. And then at the beginning of each year, I just have like a standard template, the one that kind of Tony has, and I clone it. And then I'll create folders, like one for each property that I have, and then one for like my personal stuff. And then as I get the receipts, I'll scan it with my phone, like cam scanner, and then it lets me just automatically throw it into that folder. And what I'll do is the way I label it is like the date, starting with the year, month, and then date. But I already dumped it in the very, very specific folder that's for that particular property. And so when I just go down once a month or whenever Tony hunts me down, apparently I didn't have to do this quarterly, but like it saved my life this year so much easier. Just uploading, just typing out all the stuff that I need or uploading directly to my app called Wave. And I do, like I've been doing it myself, but now that I'm doing a lot more SARE stuff too with the business, it's taking me a lot longer to do. So I share that my password with my VA that we hired from Philippines, and she just does it for me for about $4 an hour, which $4 or $5 an hour. The other way I also do is as a backup is I created one separate email just for real estate and receipts. Just it's a dumb email that I haven't used for anything else. Like no one knows about it. And every time I just scan it, take a picture, email it directly onto it. Also, again, I label with the date or whatever I did so that it's easier for me to quickly upload.
Oh, dummy. I think I heard like it was either you or someone else does that too. Like
Do what?
the like
Like
email for like receipts. Yeah.
Yeah, because it's a lot faster. Like for example, for SARE, we'll have something called AP@settlerealestate.com or something. We know that it's just for receipts, and then we'll give the access to our VA, and then we'll tell her like, okay, start just uploading everything onto it, tag whatever it's for. So it's a lot easier. But like, well, if you guys do it yourself too, that's another way.
Oh yeah. Yeah, keep it, keep it simple. As the receipt wise, doesn't have to be overcomplicated. The biggest thing is like find a system that works for you is the biggest thing. If it's a shoebox, do your thing, just add it up one day. It is, it's not preferred just before like it
The
actually
shoebox
floods.
is bad because then the ink fades. The ink will
Oh,
fade. Like
oh,
especially if it's in a warmer place or something, like, or if it's been in your car for a while, it'll completely fade.
oh, oh, wow. Okay, maybe pass on that one, maybe then. Yeah. Let's see, Bobby here. You had to pay pay a fee in CA for having an LLC out of state. Is that true? Yeah, like by definition, by the book, yes. But like, I just never seen it. Like anyone actually come back to it, and like, if KPMG takes that position, I'm okay to take the position too. Like, yeah, I guess like, yeah, it's really up to your risk tolerance at the end of the day. This is like things that we picked up and learned. It's just like, well, big corps are preparing tax returns like this at school too. Another thing I learned was like, if you have an underpayment penalty, or like for like not having enough tax paid, like they used to force us to like, like reduce it and then just wait for the government to chase you down to pay your penalty. So it's just like small tricks of the trade. So this is like a California thing though. So James, yeah, repercussion. If you don't, it's just like, I'm assuming it's probably just penalties and interest and pay all your fees is kind of like what I'm assuming. So if you like say you got busted, and generally it's just penalties and interest, and yeah, that's kind of what I would assume for you. Okay, got some questions. All right. Oh, Barb, what is up? All right, co-mingling personal and business. How organized do you want your clients to be? I would probably not commingle if possible. But if it happened in the past, I think the due diligence form actually asks you, how do you distinguish between like personal and business accounts if you don't like expenses if you don't? So best answer is just don't commingle to start with. And then if you do commingle, it'd probably be good to actually like have those receipts like super substantiated for it. So that's a good one there. Cool.
And then say like you're doing kind of related to that. Let's say if I'm going out to lunch with you, do I just write your name? I went to lunch with Tony Hoong, or do I have to explain what did we do? Why am I meeting or something like that? Or who this person is?
The best would probably like just on your receipt, jot down just who, what, when, where, why, always. Like, yeah, what you meet for, who are you with? Obviously you'll have the time and the place actually. So take care of those couple items, but it's good to document. It'll be interesting over the next, what was it, 10 years? Since they got the increased budget for more IRS agents. So it'll be interesting to see like how audits pop up. Like it was reduced quite a bit the last few years just because no budget to audit people. But there was a fun fact that I saw was if you claim the earned income tax credit or like any refundable tax credit, like a child tax credit, your chances like being audited were like 0.6%. And then from like, so like essentially that's when that big article came out, like if you're kind of like in a lower income and you claim those credits, that's why you got audited. And then everyone in the middle though, up till 500,000 was like 0.1%. And then it increases and spikes after you hit 500,000. And then like nothing really like mattered till like you made like 10 million. 10 million was just like, it was huge. I can't remember how much it was, like 8% or something. So it was like, depending on how much money you make there. All right. And then 1031 exchange extensions for disaster area. Oh, that's interesting. A 1031, do you get a longer time for 1031s if you're in a disaster area? I haven't seen it, but I'll write it down to look up though. It's a good question. Yeah, if it applies to 1031 exchanges per the original guidance though, I didn't see anything about 1031s, but it was more so income tax related. And take a look though. 1031, just copy paste this. Okay. All right. Good question. Cool. All right. Anyone else?
All right, man. Thanks, Tony. That was great.
All right, cool beans. All right, thanks everyone. Yeah, if there's any questions, just hit me up, Tony at CPA Dude, Facebook, just drop a message there, and then get you guys all serviced. And yeah, Davis will have us on the next It Depends series.
Awesome. All right. So we'll see you guys again next month for the next episode. Talk to you guys soon. Have a great night.
Take care, guys.
Bye.